Welcome back. Let's get into that market picture now. And markets in Asia plunged in the early hours of trading this morning as oil prices dropped by over 30% at some stage amid mounting concerns over the economic fallout of that coronavirus scare. Now in Japan, Tokyo's Nikkei average fell over 4% and the yen spiked as investors flocked to the safety of Japanese currency. Hong Kong's Hang Seng Index was also hammered by the panic selling, also in early morning trade, before being able to gain back some of those moves ever so slightly. The accelerating outbreak has stoked violent swings in markets around the world. Many investors say there's little clarity on what trajectory the virus will take and how effective government measures will be, making it then difficult to gauge just how much economic damage has already been baked into asset markets. An absolute thumping, though, across the board for the market, with the Nikkei falling off there 5.4% at close of trade, even below 20,000 points then. The Hang Seng in Hong Kong also 4.2% down, 25,040 points, weaker by close of trade. The Shanghai Composite closing out 3% down as well, 2,943 points. Over on Wall Street, well, last week we saw U.S. indices tumble as fears of economic damage intensified, with the global tally of coronavirus cases crossing that 100,000 mark, sending investors scurrying to the safety of bonds. The S&P 500 falling for the 10th time in the past 12 sessions as the virus then crippled supply chains and prompted a sharp cut that is, in global economic growth forecasts for 2020. Now, the travel sector gained, however, as bargain hunters began to pick up just a few battered shares of airlines and hotel operators. Let's move our attention then to how things are faring out in Europe this afternoon. It has been a fairly red day across the board, a hammering for most markets, including then out in Europe as well, which has consistently fallen of late as well. So it is down, the FTSE below the 6,500 point mark as well. Then a big fall there. It was down nearly 8% early this morning at the beginning of trade, only 4% or so down as well right now. The DAX out in Germany also being crippled, while the CAC 40 also sits in red territory there. On the local front, well, the JSE opened as much as 6% lower at some point in this morning's trade, but that began to wear off ever so slightly, but it is quite heavily down, back below 50,000 points for the first time since 2016. That's February 2016 to be exact. I'll explain the significance of that day a little bit later on as well. Industrials, 66,200 points, also down in the doldrums, with financials following suit. It has been an absolute thumping for most markets as well, including the commodity shares then, which somehow would have gained if you thought the resource board would have moved up. As expected, though, the gold shares seem to continue their uptick. Of course, investors then shifting their money away from equity spaces right through primarily into gold, which kind of makes the gold shares look a little bit prettier, and that's why that sector seems to be going up. The platinum stock, however, down this afternoon. Onto the commodities themselves, you'll see the gold price also head higher. Then, is it going to reach 1,700? Well, it actually did overnight, and that was the first time since late 2012 that it had done so. Whether it can consistently remain above that mark is the question, though, and just how much demand will there be? Is 1,700 the ceiling for now? Perhaps investors may agree on that one. It's 870 for platinum, not getting as much love with the oil price. Look at that. An absolute trouncing, going to $35.98 a barrel, even reaching around $31 a barrel today. A dispute between Russia and Saudi Arabia affecting that oil price, and we'll get to chat about it in just a second. Very quickly onto the currencies then as well. Weakness for South Africa's currency, which had actually gone far below that 16 Rand mark. Overnight it had even reached 1681 against the US dollar. That's how bad things have gotten. The last time we reached that was also February 2016. Again, a key mark telling you everything. 2085, even surpassing 21 Rand at some stage early this morning as well against the British pound, with the euro sitting way past 18 Rand as well there. Very quickly, the BRICS currencies as well, and that gives you just a sense of where those currently sit. Now, let's get a picture exactly of how things have fared. As I said, overnight has been an absolutely tumultuous picture. We've seen massive losses. And this is really what the picture looks like really for the oil price, having hovered really around that 70 to 60 odd dollars a barrel mark. We saw just as the coronavirus began to hit trade earlier this year, it began to see a massive slip off then in that oil price to around $33 a barrel there. This slip off over the last 24 hours, however, has purely been because of Russia and Saudi Arabia. What they seem to have done then is decided to fight over just how much in terms of restrictions they'll put onto the market. And since Russia has walked away from the table, what has happened then is that Saudi Arabia has said, well, we'll pile more oil into the market, and that will push that oil price even lower. They don't mind doing that because for them, it's still profitable seeing it at $33 a barrel mark there. The last time we reached that mark, well, it was really around 2016, the first quarter, around March and April there as well. So that kind of tells you just how impactful and just how much of a flow this certainly ekes out of the market and certainly begins to hurt things as well as we go along. We continue with this picture and really head on to the next graph. Also, it kind of clearly laments just what is going on there. And this is the currency on the local front. Yes, South Africa's trajectory when it comes to the currency is a general depreciation going that way. And this really is a graph over the last year, since March 2019. Now we're at March 2020. And look at that massive spike roll there. Since January, of course, we've seen a continued weakness. As I said, the coronavirus still playing its part over there as well. So this general weakness does come from the damaging effect it's sort of had very early on. Of course, we had the situation with Iran, but that was sorted. And we had hoped to dip back to around 14 Rand, where we actually started the year. But that is not to be. And having touched 16 Rand and 80 cents against the US dollar very early in the trade in the last 24 hours or so. Continuing looking at that, and I can show you just again how much weakness has continued to cramp the market and really flow into just how things have been. It has been negative. And the last time, as I said, South Africa reached this mark, February 2016. What does that say? Well, remember the night of the long knives as well, and just that fateful night as well, where then President Jacob Zuma had decided to fire Nhlanhla as finance minister, and then we brought in Des van Rooyen a few days later, and then we brought in Pravin Gordhan a few days later after that. So that really changed the market and how it's really seemingly gone. Just over the last couple of hours or so, this really is a graph really from the 5th of March. So really over the last couple of days, and there's that massive spike then. Many things have happened of late. We've seen Moody's downgrade South Africa's growth forecast from 0.7 to 0.4%, much the same as, I suppose, as 2019, if growth is anything to speak of anyway. And of course, we've seen Russia and Saudi Arabia get into that feud, and the coronavirus, that issue continuing to plague the market. It's now around 16.18 or so against the US dollar at some stage earlier this morning, but that has come down ever so slightly. Whether it was just panic is perhaps the question at hand as well. They very quickly will continue to try and see off any more of these graphs as well and really tell the picture of where things are. The last time we sort of sat at these levels as well then, just at the top here, the first quarter of 2016, as I said, February is really what it really tells you. We thought we had seen some positivity in the first quarter of 2018, seeing the Rand even go towards 11.50 odd against the US dollar in some of that trading. We had hoped there'd be consistency in that. Fortunately not to be. Our general sense of weakness in our economic structure and the way we have our fiscal situation isn't helping us either. So that continued weakness is what we're seeing as the Rand continues to head higher. The hope, however, is that it doesn't consistently stay above 16 Rand 80 odd against the US dollar, because that would certainly increase South Africa's weakness. But who knows? If we do get a downgrade from Moody's ratings agency, which is perhaps an expected announcement that could be made at the end of this month, who knows what could happen there. And this is just generally, again, over the last couple of hours, that oil price, really a massive fall there as Saudi Arabia decides they're going to spike, they're going to put more supply into the market, ultimately affecting the price as it went crashing down there into around $30 a barrel, now sitting around $35.38 a barrel there. All right. Let's head on off now to the Johannesburg Stock Exchange, where Bright Khumalo from Vestect Asset Management joins us live from there. Bright, I really just tried to detail the picture as much as possible. No one knows it, I suppose, better than yourself. It really is a harrowing look when you start seeing the market trade 6% down and you haven't even opened your eyes yet.
Yes, I mean, I was just taking a jog this morning when a Bloomberg a notification just popped up on my phone. I was like, there we go again. The rand is the whipping boy of currency traders, since we're part of that emerging market basket. This makes absolutely no sense if you ask me, because number one, we've had those bad economic GDP numbers last week, but the rand did act, but it didn't react as much as it did today, which just shows you that there's a bit of exuberance in there, because we are not an oil producing country. Had this been the Iranian currency, maybe Brazilian currency, or a currency where a Nigerian currency, for example, where a big chunk of the economic output comes from this oil price, it would have made sense. But yeah, there's a lot of exuberance currently there, and that's just my humble opinion on the currencies front. But we've seen, like you said, markets where basically a lot of oil companies are listed there. That's the FTSE and the CAC in France. We saw the likes of BP and Total basically not doing well, down about an average of 24% the last time I checked. Like you said, this is obviously driven by the threat, or what the Saudis have said about increasing output into perpetuity as long as the Russia is not in the table there. So obviously every time these kind of things happen, a very old adage comes to mind: when elephants fight, it's the grass that suffers. That brings us back home here today, unfortunately, to Sasol, which is the one that have seen basically their share price down more than 78%. That's year to date, and today alone is down about 42% the last time I checked. It's not looking good for them. And Lake Charles is still not coming to the party. It's going to be a very rough couple of months going forward. And in hindsight, they probably should have hedged the oil price. But then it's too late to say that today.
Look, we've continued to say that they should be hedging the oil price for a very long time. That's one. Two, I also thought that they diversified their business quite extensively. Clearly not.
That's what Lake Charles was, but it's that diversification process is taking longer than expected, and it's costing more than expected, and obviously you're ending up with an IRR of around 3%. It's nothing to get excited about. That's actually if you can get the output from that factory, from that manufacturing process, which is currently we haven't seen any. So I'm sorry to be the guy that comes here and says that.
Look, it's just the truth, I suppose, right? Right, at 1593, though, is that where the rand should be, all things considered, taking into account the fact that coronavirus, etc., all these growth issues?
I mean, I've said already about the rand. I think it's just there's a bit of exuberance there. We're not an oil-producing country. It's hurting us badly, but the rand has been the whipping boy. Unfortunately, that's just for currency traders, and that's because we're part of that basket of emerging market currencies, and everyone assumes that all emerging markets produce oil.
Right, are we, and this I ask perhaps tongue-in-cheek, a lot of the doctors say do not panic with regards to coronavirus. Yes, be thorough about it. I mean, we're sanitizing our hands everywhere we go in this office, but do not panic is the phrase that's being used.
What was your office doing before that?
That's the big question, right? But nonetheless, do not panic is the word being put out into the market right now, in the word by doctors, that is. But it seems that panic has shifted from doctors to the markets. Is everyone just panicking too much here?
No. The doctors are saying that there's been a lot of hysteria from the media side of things, because when you look at it statistically, the infection rate and the death rate, etc., and the people that actually die from the disease or the virus, to be exact, it's people who have, compromised immune systems, and those are people who, 8 years old and above, probably suffering from a lung disease, maybe, a respiratory disease here and there. And obviously, if you have things like TB and you're trying to recover and you catch the disease, you catch the virus, you're going to be, high risk, because the chances of you surviving are pretty low. But if you're young and fit, below 40, you shouldn't be worrying about this. But to stop the spreading of the disease, you should follow those precautions.
Yeah, of course.
That's why listening to the doctors here is very important. One of the doctors I listened to, he said, the way the media is reporting it is not even sure whether it's a pandemic or not. So the only time you should actually panic is when your health minister says you should panic.
Yeah.
But until then, there's no need to panic. Just wash your hands, for 30 seconds at a time, every 30 minutes, and keep on sanitizing those hands.
Do you think the market is panicking, though, with all these frantic moves that we've seen?
Yeah, the market should panic because it actually affects the supply chain process. We've seen, I've come to the show a couple of times explaining that to my list of Nike, Under Armour, all of those apparel companies, technology companies like Alipay, Alibaba, AliExpress, etc. All of those companies coming out and say it's going to affect them because they won't be able to move goods from China to where, their place of, where they'll be selling these things. And most importantly, the manufacturing process has paused there because of the quarantine process and people basically being told to stay at home longer than they should have after the Lunar New Year's, which is, that was a month ago. So it tells you that as soon as that kind of thing happens, it trickles down to the market. All the manufacturers, all the people that use China as their source of production or the source of manufacturing, they see that affect their revenues, Apple being the biggest one that comes to mind.
Yeah. Russia, Saudi Arabia. Gee whiz, who gets to blink first?
Look, Saudi Arabia has nothing to lose because they're still pretty profitable here. I'm not sure about Russia. I don't really know much about that country and their output and, their production, whether those numbers are of any integrity. But I don't know who's going to come back to the table. If you had to ask me, I'll put my money on Russia.
You reckon
they probably need this more than Saudi Arabia.
Yeah, and I mean, they're the ones that walked off the table here, right? They walked away from the table and said, perhaps this is not in good faith. It's 21% down thus far today. Surely that's not where it stays.
Well, if the oligopoly doesn't follow the oligopoly rules, which is we control the price here, we buy halting production, that's not going to happen. Unfortunately, this is the fair value where it's at right now.
Yeah. All right, Bright. Thank you so much for the time, bud. Appreciate it. Always good chatting to you. Bright Khumalo there from Vestect Asset Management, joining us live from the Johannesburg Stock Exchange, helping us get to grips with it all and unpacking that market picture for us. We continue to give you more economic news as well, continued updates as well on that coronavirus, and perhaps continued briefings as well as to what is going on. We're not trying to ensue any panic. We're trying to just give you enough information and enough data for you to know what is going on around the world, and you can make the assumptions yourself.